Remember, we had this bearish expectation as at last week's trading session, and if you had actually taken advantage of that move last week, you will already be in the trade. Probably you have moved your stop loss on a long-term bearish momentum, and as you can see here, we have a trend line to support that perspective. After connecting the series of lower highs here, we had that resultant bearish trend line, further emphasizing the strength of the sellers at this point in the market. However, when we look at what has been happening since the month of June, we saw that every attempt by the sellers to break down the $11,000 area has been met with strong resistance from the buyers, and the same thing also happened here in the month of September stroke the month of October, as all selling pressure around this area was negated by buying power at this level, and as a result of these, I was able to identify this area as my demand zone. And when we look at what happened here, let me zoom in so that we can see things more clearly here. So when we look at the structure here in the month of October, we saw that all buying attempt from this level at the $11,000 area was negated at around the 11,700 area by the sellers. Let me extend that level out a little further so that we can see what I'm talking about here. So we have the $11,000 level here, which has been negating all buying pressure since the month of October. So we saw the first touch here, we saw the breakdown of that structure here. Price came back to do a retest of structure, another selling pressure from that level. The same thing also happened here during the later part of the month of October. We saw another selling pressure pushing price right down to the downside. But 2 weeks ago, we saw this engulfing candle right from this demand zone, which took price a little further above that level. And one thing we saw here was that buyers were not successful to take price further above the $11,700 area. As we can see here, throughout the course of last week's trading session, we saw a situation here that looks more like a reversal pattern, which we said might likely evolve into a retracement phase, which might be a retracement of this impulsive move. You know, from a technical standpoint, whenever we have an impulse leg like this, that is price pushes to the upside in such a way that we have this kind of situation, we expect that at one point in time there is a likelihood that price might drop into a retracement phase, which will obviously be a reflection of profit-taking activities. That is, those who took advantage of this move here will at one point in time want to take some profit, and this will be reflected on the chart as a retracement right back into our golden zone area, which is an area between the 50 and the 78.6% of our previous impulse leg. So when we bring out our Fibonacci retracement tool here, we have between the 50 and the 78.6% as an area we want to be using as a yardstick for we're seeing a situation where price has broken down the $11,700 area, which was serving as the neckline of the reversal pattern that we identified here last week. So let me scale down to, let's say, the 3 hours time frame where we'll be seeing things more clearly. So here we are on the 3 hours time frame, and this is what we identified here last week. So following this impulsive move to the upside, we saw something that looks more like a head and shoulder pattern, which from a technical standpoint is a strong reversal pattern. So we have the left shoulder here, we have the head, we have the right shoulder around here, which evolved into a consolidation phase, which finally led to the breakdown of the neckline area, which we identified at the $11,700 mark, and that will be our yardstick for trading activities for this week. Now we had the breakdown of that structure last week, and price came back to do a retest of the structure. And one thing we expect is that when we have a retest of structure followed by selling pressure on our lower time frame, we want to be joining that bearish momentum to the downside, and this is exactly what has been happening here since the later part of last week's stroke the early days of this month, of this week. So now we want to scale down to the lower time frame. We want to see our price action related to the $11,700 level, and let's see if this selling pressure we were looking forward to last week will continue our time frame. Hold on a second. So we have the resistance level at the $11,700 mark, and then we have the support level at the $11,600 area. So that is around here. So this is what has been happening here since the beginning of the week. Hold on a second. I want to use this to... So we have the $11,600 level. So let's just label this for the sake of clarity. So we have the 11,600. So here we go. So since the beginning of this week, we saw a situation where price has been caught within a channel right now, emphasizing the indecision in this market. So we have the situation here. And one thing I will say here is that for those who had missed out on this opportunity right below the $11,700 mark, well, I will be advising us to remain patient. As you can see, we have this 11,600 level, which has been holding buying pressure at one point in time. So what we want to be seeing here is a signal in the form of a breakdown of the $11,600 mark, which will take out all the buy position here to give us that confirmation that a selling opportunity is looking very valid at this point. Then if a retest of structure happens, probably coming into this area followed by sudden pressure on our lower time frame, we want to be joining that decline to the downside at this point. And for those who are already in this trade right below the $11,700 mark since last week or probably this morning, well, I will be advising you to move your stop loss accordingly to lock in some profit here. And the most appropriate area I think that we should be putting our stop loss is somewhere right above the expected retest of stocks, 120 pips to catch here if price moves accordingly. So this is what we are going to be looking forward to on the USTEC. We continue to look out for selling opportunities here as price action is being monitored. Now, what happens if price takes us out of our sell position, and which is a situation where price breaks above the $11,700 mark? Well, I want to state here that if price breaks above the $11,700 mark, price comes back into the $11,700 area, followed by buying pressure on our lower time frame. Well, we might be seeing this as a bullish signal, and we could be taking advantage of that opportunity with a take profit target somewhere around the $12,000 mark, which shares a confluence with the bearish trend line that we identified on the daily time frame. And let's see how price will relate to that structure if there is going to be a breakout of source. And let me take the next 10 to 15 seconds to read through the charts before we move on to the next pair. So what do we have here? Okay. Hey Scott Benji, good morning to you. How are you doing today? And I hope you had a wonderful weekend. 832, good morning. 101, good morning to you. 832, good morning. You're asking how to profit here. Well, I would advise you to stay tuned in. I hope you've been trading. Hope it's not your first time trading. And if you are already an existing trader, I will advise you to stay tuned in. Be part of our session. We run these on a daily basis, 10 a.m. UTC. And when you continue to be part of the session, you begin to understand what goes on here, and you'll be able to take advantage of the opportunity with better understanding from what we discuss during this live session. So we have Dominic Canis, good morning. France 56, good morning to you. 410, good morning. And we have 124, good morning to you. So with the absence of no question, I guess we'll move on to the next pair.